Hi, I'm Jimmy. In this video, we're going to take a quick look at waste management, ticker symbol WM. The goal of this video is to better understand waste management's business and then have a quick look at their numbers and then see if we can come up ultimately with a fair value for waste management stock. Okay, so let's jump right in with waste management's business. So waste management operates in North America, mostly, as we can see, in the United States, but they do have some pieces of business in Canada. If you're curious, I took this map straight from their website. So Waste Management is the largest waste operator of non-hazardous materials. They own about 250 landfills, more than 100 recycling centers. They have about 400 different collection operations and more than 300 different transfer stations. A transfer station is essentially where individual people or collection trucks would bring the waste. The company then processes that waste and they put it in bigger trucks, and then they bring it to a landfill or a recycling center or an incinerator, or in some case, one of their 5 hazardous waste material landfills. Okay, now I'm sure it's obvious to all of us, but the very nature of waste management business builds in a certain amount of safety as far as an investor is concerned. When we look at the revenue going back to 2012, well, we can see that they've gradually rolled revenue higher throughout the years. Now, revenue can move in a few different ways. Since waste management provides services for a lot of government entities or different towns and businesses, well, they are in fact affected by the sways in the broader economy. For example, in the current situation today with the coronavirus, well, many businesses have been shut down and therefore they're not generating waste. And clearly, this will have an impact on waste management's revenue. Now, the flip side of that is that since many people are home, well, clearly homes are going to generate more waste. So waste management is affected by the sways in the economy, just not as much as some other businesses might be. Now, a lot of the home collections are tied to various contracts that waste management has with different towns. And since a decent number of those contracts are tied to inflation, that should help their revenue continue to at least move up somewhat. And basically this means that if inflation goes up by, let's say, 2%, well, the amount that waste management gets paid also goes up by 2%. About 35% of their total revenue is tied into these types of contracts. So the good news for us is that this helps make waste management's revenue a bit more predictable. Okay, now let's jump over to profits. This is waste management's net income over the same time period that we just looked at revenue. And we may notice that net income is a bit more volatile in revenue, a bit more volatile than revenue is. And we may also notice that in recent years, net income has actually done quite well. Now, one of the reasons that profits grew this amount in the past few years is because waste management has been on a mission to improve their cost infrastructure and improve their overall efficiency, the overall efficiency of their business in general. One example of this is upgrading their collection trucks to automated trucks. And over the long run, they anticipate that would have some cost-saving effects on the business. But upgrading those trucks is going to force them to spend money now to make those upgrades. And they're trying to do some of that now in 2020. So since we know it's going to cost something, we can expect for increased costs, at least in 2020. And when we look at their free cash flow, well, we can see that free cash flow has also done quite well. It's very similar to net income. But when we add analyst projections to this, well, we can see an expected dip in 2020. And that's likely from two things: an increase in capital expenditures. A good example of that is the changing over of the trucks or upgrading of the trucks. Plus, as we all know, there's a pullback in the broader economy happening. Okay, now let's see if we can come up with a fair value for waste management stock. So this is a discounted free cash flow valuation I put together using analyst estimates. And I'm not going to dive too deeply into this whole calculation. If you're curious, I actually did a whole video on how to do all of this, and it's sort of a step-by-step guide on how to perform this exact analysis. And I created an Excel template that you can have if you want. I got a link in the description below to that DCF video. Okay, so what I did here is I took analyst estimates for free cash flow going out the next few years, and then we take that and we discount that by a required rate of return of 7.5%. Then I used a perpetual growth rate of 2.5% to come up with our terminal value. And in this particular case, I think this is a very fair perpetual growth rate to use because the perpetual growth rate is supposed to represent how fast waste management can grow free cash flow forever. And since their growth is often tied to things like population growth, how many households are there, and what is the overall growth rate of GDP, well, 2.5% seems like a very fair perpetual growth rate to use. Okay, so with that calculation, that gives us a total value of the company. We divide that by the shares outstanding, and we get a fair value of about $112 per share for Waste Management stock. Okay, now let's switch over to their stock chart. And we can see that Waste Management's stock chart has fallen, and it's been under a bit of pressure as the stock market, thanks to the coronavirus thing, as the stock market has fallen, Waste Management has fallen right alongside it. Now, our fair value right now is $112 per share. That's right about there. Right now, the stock is trading at about $100 per share, so that's about, call it 12% higher than where it currently is. Now, our question is that enough of an upside to buy Waste Management stock today? And I suppose that depends on how much of a margin of safety each of us would be looking for. Personally, I'd like to see the stock fall a bit more. With a stock like this, I'd probably be okay with this in the 15% range. If I had 15% upside, maybe 20%, I think that would make sense, because to me, this is a long-term type of holding, but that depends. That would vary from person to person, depend on our portfolio structure and what our risk tolerance is and how long we plan on holding it. So that's going to change from person to person. Now, if we're not 100% sure of how to come up with a reasonable margin of safety for our own portfolio, I actually did a video called When to Buy a Stock, where I go deeper into how I come up with my own personal margin of safety and how each of us can sort of tackle that whole topic. Perhaps that could be a good next video for you to watch if you're curious. There's a link right here, and there's a link in the description below. And thank you so much for sticking with me all the way into the video. I really appreciate it. Hope you found this interesting. Thanks, and I'll see you in the next video.